If you've been wondering how you can make alternative income using real estate, you are at the right place and welcome. And my good friend, if we are meeting for the very first time, well, I am the founder here at the TJ Tribe, and I have been doing this business myself of buying real estate, particularly to rent out to families, to student accommodation, and also I do what we call flips. Our weekend videos, which are generally a little bit longer, are full of real life teachings of recent projects done with people like me and you. And we do this so that you can be able to learn from them. So I'm excited that in today's video, lean in. Yep, I do say that because it's full of value in it. So if you have to replay, my good friends, please do that. And above that, if you have any questions, whatever questions that you might have, there's no question here at the TJ Tribe that is dumb, or don't be shy to add in a question in the comments below. Please ask your questions and together we can be able to learn. And that's what the TJ Tribe is all about. Iron sharpening iron from wherever you are, right here at the TJ Tribe. My friend, let's go. Today's session, I want us to talk about something that I'm highly passionate about, and I hope that you are going to get it. Not a lot of people get this, but I want you guys to be able to get it. If you get it sooner in your game, you will be able to understand the game at a wider space. My friends, we are going to be talking, this is financial statements. Everybody should have the understanding of this. If you don't have an understanding of it, that's fine. Phone a friend. So pick anyone that is here. And I'm hoping you've started connecting with other people as well on here. So Andrew, go for it. What's your understanding on this diagram?
Evening, everyone. On the first diagram, I see a behavior of a person or of a business that has income. And on that income, they have also some expenses. And then on the assets and liability statements, they have assets, but their assets are lower than their liabilities. It means that they have assets, but they spend more on the liabilities. That is my understanding on the first diagram.
Okay,
and then
thank you.
on the second one.
No, that's fine, Andrew.
Okay.
Right. Thank you very much. Okay. Now, I want to ask, I'm going to go to Moshe. Moshe, what's your understanding of this diagram? Just the first diagram. Translate it to me in your own words.
So the first diagram depicts the income, which is slightly less than the expenses, meaning that the money that this person, or the money that's received, is less than what is spent. Yeah, that's what I'm getting.
Okay, good. Thank you. What should this person be doing then? I want us to solution this. So I'm going to go to someone else. Are they in a good position? Are they not in a good position in life? What should they be doing? This person here. Their income is slightly less than their expenses.
Okay, this person is surviving because their income is slightly less than their expenses. So meaning then when they receive income, they spend maybe 80% on their expenses and then left with just little to survive. What they can do is to try reduce on the expenses. when they receive income, at least they have less to spend on and more to save to save for investments, I would say.
Okay. What's up, Mang? Have you ever been in a situation like this?
Yes, I have, TJ.
Okay. So from an expense perspective, and I'm wanting us to be very practical here, guys, because some of us are in this position. So, Otsabamang, what did you decide to cut off? And before Otsabamang responds, I am going to give you, my guys, what I did at one point. At one point in our household, we had 2 cars. The one car was literally 15,000 rand to maintain. Very beautiful car. My wife loved it. And when we discovered this is where we were, we made a decision that the car should go. But it was a very tough decision, tough conversation, and we had to head it. And it freed us of 15,000 rand. And that was the repayment from to the bank, the insurance part of it, and just the general maintenance of the vehicle. It's a big thing. So you might be asking yourself, so TJ, what did you start using as a car? We had another paid up car, which was 10 years old at the time. So I want you to think of it, to say from a social perspective, that wasn't good at all, but we had to be sincere to ourselves. Do you have an example of something that anybody who's here, if they're in this position, something that they can cut off, that is practical, that also helped you?
Okay, the 2 practical examples that I can give on my side is a loan. I had a loan that I was paying about 6,000, and from that loan, the payment term was longer. So I tried by all means to just save, not necessarily save, but I was able to, after payment, I was left with just enough amount to cover my expenses and also pay or top up the loan payment, the monthly repayment. So what I did, I just topped up that amount and saved myself from paying long term. And then also I cut on my daughter's transport. She was using transport to school. And I thought, okay, if I transport her myself, because I'm leaving home 7 o'clock and she's supposed to be at school 20 past, it's doable. So I managed to cut on those and just saved myself. I'm now 6.6 up plus. So yeah, those are the 2 examples that I can give on my side.
Good, well done. I can also testify to the same point that you spoke about now, around the kids' transport. That has also been in the past, but the reward of it was that after I started taking my kids to school, now we had time together. And because I'm always looking at opportunities of improving, I then looked at it to say, how best can I spend this quality time with my kids whilst we are on the road, not just going to school and coming back, and how best can we connect with each other? I want us to go to diagram number 2, which is on the right-hand side. And Baleseng, what's your understanding of this diagram here?
All right. The diagram is of a nature of income statement. So you have your income, that is very big or large, and limited expenses. Yeah. Here, I think you are doing very well. Your expenditure, I mean, your income is fine, is good. You can spend, but your expenses are just limited. That's very good. That's a good picture.
Okay. Thank you for your feedback. Nadine, what's your understanding of this picture here? And by the way, what is it called here? So the two diagrams that are on top here, what are they called? There's two diagrams, the one on the left and then the one on the right. What is that called? Nadine, go for it.
Thank you. Okay, I understand finance, but not that too well.
Sure.
So
That's why we're here to learn.
yes, I won't go too deep, but what I understand about the second diagram, it's there is more money coming in and less expenses. Meaning, if this is a company, I would say the company is doing well. And it means even if they want to expand, there is something in their income that can help them.
Okay, cool. Thank you. Anybody else who knows what these two are called? What statement are they?
It's an income
Statements
statement.
of cash flow.
It's an income statement.
Yeah.
Statements of cash flow together.
100%. Okay. If we were to look at the bottom, what is that called? The one at the left and the one that's on the right.
Yeah, I think this one is your balance sheet.
It's your balance sheet.
Yeah.
Okay. What is the difference between the income statement and the balance sheet? Someone else?
But the income statement, it's more of your income and expenses. And then the balance sheet, it's more of your assets and liabilities and owner's equity.
Okay. Rose, give me an example of what you would consider as assets.
Okay. Okay. An asset is anything that make money. Like you can buy a house, but the house that I'm staying in, because I'm maintaining, I'm not getting any money. We can't call it an asset. But if I've got a house and it's generate income, then that thing anything that generates income, we can call it an asset.
Okay. Now, I want to throw in a curveball here. I have a house in a company. It is not mine. And I stay in that house. And on the same property, I have my office. I have no tenants. Is that an asset or is that a liability?
It has to be a liability.
Okay. Why is it a liability?
Because if there's no cash flow coming in.
There you go. Right. So what if I throw in and say to you guys, I run a business on the same property, and my business that I am running on this same business, this is the picture of that business. So I stay on that property, but I have this view here. Is it an asset or it's a liability?
It's an asset because your income is more than the expenses.
Okay. Anything that gives you money, it's an asset. Anything that takes money from you, it's a liability. Now, I want to say that to you, all of us that are here today. This may sound like we're talking about companies. We are not. Right. These are the two documents the bank understand. These are the two documents that any taxman, SARS, or wherever you are in the world, this is you as an individual. So you as an individual, a lot of us, we are put in a corner and we are told that we need to have a budget. Right. A budget just basically says, I have 10,000 coming in. How much money do I need to spend? Now, if you were having 10,000, that's your income. So you're budgeting your money and you are now going to have the expenses. We should all thrive to have in our personal space an income statement. An income statement is how much money is my employer giving me, those of you that are still employed, and it's 10,000. How much is my expenses? The bottom end of the income statement gives you what is called a profit or a loss. So are you making a profit or are you making a loss? Whether you're running a business, whether this is a salary that you're earning, that salary that you're getting, you're running a business. That's the business. You being employed, that's the business. So you need to have this P&L, which is a profit and loss, it's an income statement. And hopefully you are in this position. Hopefully. If you are in this position, your homework is, what is it that I can cut? Right? For some of us, we then saying, TJ, I can't cut. There's nothing I can't cut. You do not have an understanding. Well, my friend, you are extremely fooling yourself. It's either you can decide to cut for yourself, or life circumstances will force you to cut. Life circumstances will force you to cut. I speak from experience. At a point, my wife and I, we were earning we would bring home, as employees, we would bring home 100, 120,000. Life happened, we could survive on 30,000. When we were both making 120,000, nobody would have ever convinced me that I could survive on 30,000. Just practically impossible. Now, it is easy for you to make the decision to cut rather than for life to make that decision for you. So today's session is a very personalized session. You know your expenses. You need to look back. That's your homework. And we need to say, what is it that I can draw back on? Or if you cannot draw back on anything, then we need to say, what is it that you can do extra? Can I be an Uber driver? Can I be selling something? What is it that you can do to increase your income? Right? Because the moment you can increase your income, this is what's then begin to happen at the bottom diagram here. You can be able to buy more assets. And hopefully your assets, by definition, they need to give you income. And now, within that, we can then say, well, this income is now coming from the assets, so now I'm getting more income. And the income now goes and pays your expenses. Right. At this moment, I was able to buy properties. There is 5 of them. Okay. The value of those properties, I went to borrow 3.8 million from the bank. So it's a liability, right? The value of that property is 10 million, right? However, because it is 10 million. 3.8 is liability. So the difference is what I am rich on. Now, 4.1 is what I'm making per student. So times 50. How much is that? Somebody tells me. 4,100 times 50.
It's about 222,000.
200, yeah, 200 something.
Okay. Thank you. So the asset is now giving me an income. Where am I? So the asset is now giving me an income. Bingo. There's the money there. This here, the liability, that's an expense. ABSA is going to look for it. Let's just call it 50,000 for easy mathematics. I'm going to pay for their 50,000. But I'm still going to have profit. Now, we can paint this picture, my friends, in so many ways. I'm being an employee. I'm working at the government. What does it look like? The beauty of the game that I'm teaching you is that once you buy these 5, there's no restrictions. Tomorrow you can go and buy another one. Tomorrow you can go and buy another. Next year you can go and buy. So there's no limitation to this game. So which means that your income is forever increasing. Yes, you're taking in more debt. So let's increase that. Okay. But so should be your assets. And so should be your income. And obviously, yes, your expenses increases, but you're growing. At some point, remember, we have tenants that pay off our loans. So all of these tenants here that we are seeing here, they will be paying off this liability that we're getting at the bank all the time. They are helping us to do that. Does that make sense, my friends? A lot of us, this is where we are. And this is, we are in a position where we make money and we get a promotion, 20%. So does our expenses increase with 20%. And the only asset we assume we have is actually our house, which is actually not an asset because we've just defined that now. But here we drive a very expensive car, which is a liability. Some of us even have like a holiday home somewhere. During the year, there's nobody who's staying there, no Airbnb, nothing. Some of us, we even bought bicycles. We're trying to lose weight. And we have these bicycles that we bought. They're in our cupboards, but nobody used them. There's no return on it. Some of us, we've got an air fryer, a microwave, an oven. What else? What else is there these days? Toasters, kettles. Some of these things do the same thing. We have them in our houses. But we are not building here. Why? Because we have an income. So I want us to change it, my friend. This is how the rich get richer. What I've been teaching you today, it comes from the book that's called Fake. And it talks about the rich getting richer, but it is also in the first book that Robert ever written about, which is the Rich Dad, Poor Dad. And basically it speaks about us understanding the financial statement, these two things. The homework that I'd like to give you guys is, please forget about the budget. Don't play in that space. I'm going to call it the devil. Don't do budgets. The budget, you are saying, I have X amount of money. I want to learn how to budget this money. You are managing the money. If you are employed today, I want you to have an income statement. If you've got a company today, I want you to have an income statement. How often do you look at your income statement? At bare minimum, it should be twice a month. When? Right. The first point is when you're expecting the money. Did the money come? The second place is when you're running all of the expenses. So for instance, because I run a business, we look at all of our income statements on the 5th of each month. Because everybody should have paid by the 1st. So that's when me and my bookkeeper, we sit down and we said, did we receive the money? Did the money come through? And if the answer is yes, bingo. Right. How many debit orders do we need, or is it going to run? And then we set that up. How many do we need to pay? Okay, we need to pay them. So between the 5th and the 6th, the bank, ting, expenses, ting, it goes off. Right. So when next again am I looking at my money? So this was the first time of the month. And then this time around on the 20th. 10 days before the money is supposed to be coming and 20 days after. Why am I looking at it like that? Two reasons. The first reason is I was expecting some money and it didn't come. So did it come? I gave them grace. I followed up on that people, on that business, whatever it is. And why am I following up again on the 20th? I am now preparing for the next expenses to make sure that my business continues to run effectively. I am not being disconnected on my services. And if this year is a kitty somewhere and I do not have enough money in my bank account, I can move this money to the bank account that runs off the expenses. This is a good relationship with your income statement. So some of us, we don't even have one. So how do you know whether you've made profit or not? TJ, if I'm employed, should I be making profits? Yes, you should be. So what should be in your income statement? Your salary, that's your income, and then all your expenses. Are you running a profit or you're making a loss? Simple. The day that you're going to run your own business, this is now income from your whatever that you are making, whether it is sales or whatever it is, and then it comes in here. Bingo! It comes into the income, and again, your expenses. Are you making profit or are you making a loss? If you're making a profit, amazing. What do we do with that money? If you're making profit, there's your profit there. We go and buy assets. If you're like Taffy, maybe you go and buy a second Uber. If you're like TJ, maybe you go and buy some more properties. Now all of a sudden, assets grows, more income coming in. And that's why we say that the richer never work for money. They work for assets. assets pays them. And you don't worry about your liabilities because your assets is paying for it. This is where I want you to be. But how do you start to be here? Simple steps. Homework number 1, have a profit and loss income statement. You need to be close to that income statement, please. Twice a month. If you're running a business where you are selling stuff, you need to be in there every week. Right? Or should I say, if you've got a higher cash flow business where money is coming out, money is coming in, that kind of thing, especially like a sales, where you're doing sales all the time, then you need to be looking into that business with your bookkeeper or even yourself. Or then you're looking at your statement, how much money came in, you register it on your Excel spreadsheet. You do this on an Excel spreadsheet. There's sophisticated systems that you can use, but I advocate just start with the normal Excel spreadsheet. Now, here on your balance sheet, how often should you be looking at it? The balance sheet here. How often should you be looking at it? Ideally, every month or every quarter, because you're not buying assets all the time. But you need to understand the assets that you actually have and the value. But remember, the assets value don't change frequently. Cars change values every month. Real estate changes value every year, not unless it's a forced appreciation. So, and your liabilities really changes fast if you're paying your interest. So you want to look at that on an annual basis, that kind of thing. So your big concern, not your big concern, yes, your big concern. Your big concern is not here. You should know what it is looking like, your balance sheet, that is. Okay? And everybody should have a balance sheet. In actual fact, you should have, with what we are learning, everything else that we are learning, you should be having your balance sheet as a person, me, because some of you have already started. Number 2, you should have your balance sheet on your company, because now you have a company. So you should have an income statement for you, an income statement for company, and you should have a balance sheet for me, and you should have a balance sheet for the company. Hey, my good friend, I apologize that I had to break this hot conversation, but this is very important for us to have a conversation. You might be one of those parents who are beginning to figure out or trying to ask yourself the question, am I doing enough for my kids? Or am I doing enough for my retirement? Or is my job that I am doing, climbing the corporate ladder and making all the sacrifices that you're doing right now, is it giving you enough? And I meet lots of parents that are asking themselves these questions. And the real question is that, is this really it? Well, my good friends, you are not alone. Many parents reach a point where they ask the questions, could there be other options? Could there be a better way to secure my future? And above that, is there a possible dream or the dream of becoming financially freedom? Is it possible? Well, if you are asking yourself those questions, my good friends, you are at the right place. And the reason why I say you are at the right place is because I used to ask myself the same questions. I worked for all the banks that you can think of about here in South Africa. And I traveled throughout Africa and I traveled throughout South Africa, making the bank great. However, this gave me so many skills. This gave me so many opportunities. And above that, I was able to take my kids to school. But here is the thing. I knew very well that this was not it. Whilst I was doing this, I started investing in real estate, as you all know, and you are here. And I started earning what is called alternative income. With that, I reached my financial goal 101, which was basically replacing my income. I did that at the age of 37. That was hallelujah. Achieving financial freedom and retiring at the age of 37. Then what? Then I started building my business, which is now giving me a greater return, and I now spend more time also teaching other people like you. With my years of investing in real estate in different strategies, from buying blocks of flats to student accommodation to doing flips, I then created a 3-part course that we do throughout the year. And we do this 3 times in a year over a weekend, and we call this the Making Money Masterclass. With my years of investing in real estate, from buying blocks of flats to student accommodation and doing flips, I then created a masterclass, which is an ongoing masterclass, and this happens 3 times in a year. My good friends, these weekends are generally packed with real strategies, real examples, and real guidance from myself and a few of the other powerhouse teachers that we also work with that have done the same thing, obviously gaining financial freedom. This isn't a get rich quick scheme. It's not. And I'm not trying to preach to you to say you can come into this class and then you become rich very quickly. No, it's about learning how to build a solid, smart income through real estate. This is not some get rich quick pitch or for you to think, you can leave your job tomorrow. No. This is not that. And this is not also about reckless investments and people just telling you, hey, you can go and do this. This is really about, my good friends, how to build a solid business, how to create smart income through real estate over a period of time. And if a guy like me can do it, I am sure you can be able to do it yourself. Now, if you are one of those people who are hardworking dads, or even you're a single mom, and you're thinking that you want to be able to give your kids more freedoms because you are available, and you can be able to create more choices, and you can leave a stronger foundations, then you belong into this room. We do this 3 times in a year. And it's just basically 3 weekends that you're setting yourself apart to come in and learn. And each learning each weekend, it has a different teacher. It has a different topic that we dive in. And if that is you, I want to invite you into that class for $997. It's not a lot of money. I'm sure you've spent more money in doing some stuff that you even regretted. But this time around, I'm saying for $997, you can change your game. You can start to do things differently, and potentially you can start to explore how real estate investments really works. And this can potentially be able to put you into a stepping stone towards your financial freedom. And my friend, this can create a peace of mind. And this is the life that you can design. It's not about us. We give you the work, we give you the guide, and together we can come in and we can do this. So my friends, your family deserves this. Your family deserves the best version of you. And this is out of all creating the freedom that we speak about. And you just thriving in your business. And above all, you being in control of your future. So I'm excited to see you at the next masterclass. And you can check out the link in terms of when is the next date. For $997, we'll see you in class. Well, I am sure that you've been writing so many notes on this one. And I'm sure you probably have pages and pages of just the learnings that we got in today's video. So well done in learning with us. And my friends, this is just the start. We have more learnings to help you on your journey of building alternative income. And my team and I, we want to help you, but we cannot help you if we don't know who you are or where you are on your journey, right? So help me so that I can be able to help you. By doing that, all you need to do is just jump onto our website. You'll see it comes up here, www.thetjtribe.com. And all you need to do is to click on the link that says Discovery Call, book my slot for Discovery Call. And we will guide you on the next steps of how best you can be able to learn more. What you learned today is probably maybe about just maybe like a fraction of what we teach here at the TJ Tribe. So let me help you, but I can't help you if I don't know who you are, and I can't help you if I don't know where you are in your journey. I am eager to help you to make this year, or to rather guide you so that this year can become your best year ever in real estate. But above that, thanks for watching, and if you have to send this to someone else, please do that. Don't forget to share, and if you have commented, hey, we will check you out in the comments again. But don't forget to book that call. It is essential for your generation. It is essential for you creating an alternative income, and we want to help you. It is I, TJ.